All right, guys, get ready for FTX 2.0. Speaking of failed banks, crooks, and financiers that basically are parasites. This is funny because Elon tweeted this: crypto's a scam, keep money in banks. Or banks are a scam, keep money in crypto. Well, at some point you come to the realization that everything is just a big giant scam. Now, what's interesting is I found this old video of Max Keiser. He actually predicted the collapse of USDC.
It's about to go bankrupt. Circle is the one you need to work. It's USDC. That's the one to look out for. Circle. They're in trouble. They're the next FTX. They're about to go bankrupt. That's a big pile of shit. Is Circle.
Some say Bitcoin fixes this, like Max Keiser. Maybe it is decent, and it certainly is not centrally powered like, FTX or any of the other cryptocurrencies, which they're all centrally controlled, centrally planned, and centrally scammed. An example is Circle that runs USDC. They had $3.3 billion of its reserves inside of Silicon Valley Bank. And guess what's going to happen to this? They can't access their money. So now USDC, which is supposed to be a stable coin, what's funny is a lot of people actually pushed for USDC usage. Actually, I remember last year, instead of Tether, another stable coin, where Chief Tech Officer of Tether, they did say that their crypto stable coin has zero exposure to Silicon Valley Bank. That's a great thing because Tether has a market cap of $72 billion. That's a lot of money there. Out of more than $175 billion that Silicon Valley Bank had, over $155 billion is not insured. That's kind of a big problem. Cryptosphere, of course, is in massive trouble. Binance and Coinbase, they have temporarily shut down USDC services conversion because, of course, the Contagion from the bank. Here's an example of Binance tweeting out, citing current market conditions, i.e. collapsing banks. Coinbase also tweeted out something. They're temporarily pausing USDC to USD conversion. They are the largest crypto exchange in the United States, and according to Bloomberg, they're also on the most shorted company list. So things are not looking good for the crypto world right now. But now you have Silvergate just closed down, shut down by the feds, and now Silicon Valley Bank shut down by the feds. The era of free, funny money apparently is ending because of high interest rates. And that's probably a good correction because Wall Street depends on cheap cash, cheap money printing cash that they're allowed to access. But of course, the guy on Main Street, average Joe and Jane, is not allowed to touch this free money. They are. And that's why people hate the gangsters. I mean, the banksters. Crypto crowd got rid of, get this, $2 billion worth of USDC in the past 24 hours. That is a whole lot of whoppers. So all this really means that Silicon Valley Bank has spread the damage to other financial institutions, not just to the cryptosphere. Another bank also has people lined up outside. People are trying to get their money out because they know that if the feds take over, it could be months and months, and maybe they'll never have access to their money. That's the problem. Check out these people outside the First Republic Bank in Southern California. With all the weather problems California's having, and of course, these banks, well, they're not doing too well. Rain or shine, very important to have access to your money. So be careful no matter what it is you put your money in. Well, if you don't think this stuff is a big deal, well, it kind of is. Now the Fed Reserve is thinking about, get this, opening up a fund, starting a fund just in case more banks fail. Well, they're going to load up this fund with, guess what? Printed money. What does this printed money do? It adds to the inflation. More money out there circulating makes the money worth less. That's the problem. This is all just in case more banks fail. Bloomberg reports that the FDIC and the Fed Reserve weighing creating the fund that would allow the regulators to backstop more deposit at banks, plural, in case other banks start failing. Also, regulators discussed a new special vehicle in conversation with banking executives, according to people familiar with the matter. Supposedly, this is a contingency plan to kind of calm down the panic as all this, craziness spreads through the financial institutions. All problematic because it increases inflation. So I suspect that things are actually going to get even more expensive now. This is so stupid. These people are crooks. massive crooks. People that did the scammery back in 2008, well, nobody went to jail. Instead, they got bonuses. Disgusting. Record bonuses at that. These guys have access to unlimited money printers, and it's kind of a big deal. Big problem in our financial culture. Sign of decay, a sign of social decay for sure. Anyways, guys, check out this other video about the banks and money. All right, that's it for now. Thanks for watching. Smash a like if you haven't. Please do subscribe, and I'll see you in the next one.
Can anybody out there